identifying trends, evaluating momentum, finding reversals, overbought, oversold, and divergences, all of them in one indicator. In this video, I want to introduce a new indicator on TradingView that will blow your mind. I'm going to teach you 2 trading strategies based on this indicator, so make sure you watch this video until the end and let's get started. Before we add the indicator, I'm proud to announce that recently I published a book, The Art of Price Action Trading. The link is in the description and you can get it later if you're interested to learn price action trading and take your trading to the next level. To add the indicator to our chart, here we click on indicators and we search logarithmic moving average, this one, which is a new indicator from Quant Algo. Alright, this is the indicator and as you can see it is added here below the chart. This indicator uses advanced logarithmic calculations to create a dynamic trend following oscillator. As you can see, we have a line here that oscillates above and below the center line, which is set at 0. This line can help us with trend identification, momentum evaluation, finding reversals, overbought, oversold, and divergences. When the line is above the center line, the color of the line is between yellow and green, and the area between the line and center line is also green, and this shows that the price is advancing. And on the other hand, in times that the line is below the center line and the color is between yellow, orange, and red, and the area between the line and the center line is red, this shows that the price is declining. In times that the line is becoming more and more red, this shows that the downside momentum is increasing, and when the downside momentum is weakening, the line turns back to the center line and the color becomes yellow. So in this situation, yellow shows weak downside momentum, and similarly in uptrend, when the upside momentum is increasing, the line color is green, and when the upside momentum is weakening, the line turns back to the center line and the color of the line becomes yellow. Now you may wonder if center line crossovers provide buy-sell signals or not. Basically, when the line crosses above the center line, it is a bullish pressure in the market, and when the line crosses below the center line, it is a bearish pressure in the market. But these pressures are not always strong, and we may just have a small movement of the price after them, which could be because of a pullback or being in a flat market. So we need to somehow filter bad signals and only take the ones that have higher probability of success. Later, I will teach you a trading strategy based on this, so make sure you watch this video until the end. Alright, we have also 2 dashed line here. This one is green and this one is red, and by default they are set at 0.5 and minus 0.5. These are short and long thresholds, meaning when the line crosses above 0.5, it could be a good opportunity to enter a long position, and when the line crosses below minus 0.5, it could be a good opportunity to enter a short position. If we go to the settings of the indicator, here, depending on your trading strategy, you have different options to choose. For example, when we choose scalping, the dashed line will place at 0.3 from the center line, and also other settings related to the calculation of the line will change. Or if we change the preset to, for example, swing trading, here the dashed line will place at 0.7 from the center line. So depending on your trading strategy, if it is scalping, swing trading, trend following, or mean reversion, you can choose the appropriate preset here. I choose default, which is a good option for the trading strategy that I am going to explain. Alright, in times that the line is very far from the center line, it can be a sign for overbought or oversold. But since this is an unbounded oscillator, you may find it difficult to know exactly where is considered far. And to identify overbought or oversold conditions, you always need to have an evaluation based on the recent swings of the price. For identifying overbought and oversold, we have better indicators like RSI, so I don't recommend to use this indicator for overbought and oversold condition. You can also use this indicator for identifying divergences, so you can find reversals in the market. For example, here you can see that the price made lower low, but here the oscillator made equal low. It didn't follow direction of the price. When the price makes lower low, but the line makes higher low or equal low, this is called bullish divergence, and it gives the possibility that a reversal is probably going to happen. But we don't enter a trade just based on this signal, because you can have a bullish divergence and after that just a pullback, and then further decline of the price. So we need more confirmation regarding the reversal. The most effective way is price action analysis. In a bullish divergence, we mark the high of the pattern, which is actually the last lower high following the downtrend. When this level is broken and we get a candle closed above this level, this shows that the structure of the downtrend is violated. So here we have higher probability that a reversal is going to happen. Similarly, when the price makes higher high but the oscillator makes lower high or even equal high, this is called bearish divergence, and this gives the possibility that a reversal is probably going to happen. In the bearish divergence pattern, here we mark the low of the pattern, which is actually the last higher low following the uptrend. When this level is broken and we get a candle closed below this level, it tells us that the structure of the uptrend is violated, and now we have higher probability that a downtrend is forming on the chart. Alright, now let me teach you another trading strategy, which is a very accurate trend following strategy. We need to add another indicator. So here we click on indicators and we search parabolic SAR. We add this one, which is a built-in indicator on TradingView platform. We're going to use this indicator with default settings, and we're going to use it for finding buy-sell signals. Let me teach you how you can use this setup for finding trading opportunities. Here in this indicator, when the line goes above the center line and stays there for a while, we wait for the times that the line goes below the center line and becomes yellow. If the line keeps going down and becomes red, like here in this part, we are not in an uptrend anymore. The price is supposed to be declining in a downtrend. So we want the color to be yellow. Now that the line is below the center line and yellow, we focus on parabolic SAR. In parabolic SAR, when the price is declining, the dots are above the price, and when the price is advancing, the dots are below the price. So in this situation, we wait for the time that we get the first dot below the price, and this is where we enter a long position. Although this line is still below the center line, but because in parabolic SAR we get a dot below the price, this shows that we have a change in momentum. We have a shift in upside momentum. So here the buy signal is confirmed, and we can enter a long position at this point when the new candle is opened. The stop loss for this trade is placed below the previous sewing low, and profit target at 1.5 risk to reward ratio. You can see that the line stayed above the center line up to this point where it went below the center line, and providing us another opportunity to look for long position opportunities. For this purpose, from here we focus on parabolic SAR to get the first dot below the price, which happened here at this point. So here the buy signal is confirmed, and we can enter a long position at this point when the new candle is opened. The stop loss below the previous sewing low, and profit target at 1.5 risk to reward ratio. Alright, for short positions, while the line is below the center line, we wait for the times that the line goes above the center line and the color is yellow. Then from here, when the line is above the center line, we focus on parabolic SAR. When we get the first dot above the price, which happened here at this point, this is where we enter a short position, because this shows that we have a sudden shift for downside momentum. So here the sell signal is confirmed, and we can enter a short position at this point when the new candle is opened. The stop loss is placed above the previous sewing high, and profit target at 1.5 risk to reward ratio. After this trade, you can see that again the line went above the center line, so another opportunity to look for short position opportunities. Here in parabolic SAR, you can see that we get the first dot above the price at this point. So in practice, we could enter a short position here when the new candle was opened, and this trade is also a profitable trade. As you can see, please pay attention that although this trading strategy is very accurate, but it doesn't mean you will not have false signals. No, this is not possible in reality, and losing positions are always part of the game, so you need to manage your risk properly. There is a risk management strategy that is called 1% rule, and it's one of the best risk management strategies that you can use. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy, you cannot become a consistently profitable trader. indicator. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.